everyone. Welcome to the 147th episode of the Timing Research Show for July 31st, 2017. My name is David Kosmeter. I'm the creator of Timing Research. And today we will be discussing the 201st weekly report, which you should see on the screen right now while I'm talking. But if you'd like to download the full PDF, you can go to TimingResearch.com and download that there. I have Matt Buckley back to host today, so I'm going to go ahead and turn it over to him.
All right, thanks, David. Appreciate it. Folks, good morning, good afternoon, good evening. Depends on where you are calling in from around the world and joining us. Going to be a very, very good session. Man, every one of these weeks, I do a Friday market wrap-up at my website, topgunoptions.com, and it seems like every Friday for the past fill-in-the-blank Fridays, it's been, hey, what a week. So now you're joining us on Monday for the brief of the week that'll come. I mean, last week had everything from North Korea to the chief of staff being fired, earnings, you name it. And we just continue to kind of meld up, right? Climb this wall of worry, hold your nose rally, whatever you want to call it. So David's done a great job this week of assembling a round table of 500-pound financial heads, and I'm going to go through them real quick. They're going to introduce themselves. I'll tell you about me in a little bit, and then we're going to get right into it. So Stefanie Kammerman is from the StockWhisperer.com. Steph's joining us from up in New York. And Steph, why don't you give us a quick executive summary about your trading background and what you do at the Stock Whisperer?
Hey, Matthew. Great to be on your panel again. It's been a little while. So my name is Stefanie Kammerman, but people call me the Stock Whisperer because they think that I'm psychic. I have this crystal ball, and I know where the market's going. No laughing over there. So no, I don't. I'm a tape reader, but I've been reading the tape for 24 years, and I focus on the dark pool, which is really the people that are moving this market. I've called the last 10 corrections on social media before they've happened, and I'm not psychic. I can see the dark pool selling, and I'll talk about that in just a little bit about levels to watch that they're trading. But I run a live trading room all day long. I have a couple hundred traders in there, and I trade live, calling out entries, exits, and it's an educational room. I think it's really, really important that you learn by watching other traders trade. That's how I learned. I started 24 years ago at the largest prop firm called Schoenfeld Securities in Jericho, Long Island. And I sat in the $1 million room, and I didn't know anything about trading. And that is the best thing that ever happened to me, because these guys took the time and showed me how to trade. And when you watch traders that are very successful trade, that really is the best. I paper traded for a very long time, and then my firm gave me $250,000 to trade with. I was Trader of the Year my first year. I ran a trading desk. And let's flash forward, 2009, I've been running online trading rooms, and I started the Stock Whisperer about 4 years ago. I'm on tour with the World Money Show, where I do presentations pretty much dedicated to the dark pool. Most people think these trades are invisible, but they're not. I have thousands of pictures, and I'll share with you the really big trades that the dark pool has been doing over the past week or two. But let me just finish by letting you know that I am coming out with a dark pool app this week, and I'm really excited. I'll show you a little bit about what it looks like for those of you that can't be in a live trading room but want to know, right, where the smart money is going, what's happening. So thanks for having me on the show.
I like it, Stephanie. We're gonna put that psychic to the test here in a bit. Okay, Glenn Thompson is joining us from Pacific Trading Academy. Glenn, give us a little. Are you joining us from the Pacific Coast, or where are you calling in from?
As it turns out, I'm in Los Angeles. So
perfect.
Yeah, I'm from New Jersey. Worked most of my life. Well,
what exit?
With the, let's see, off the Turnpike or the Garden State Parkway.
Garden State Parkway. North.
I've been out here now 19 years. So I was in North Central. Grew up in Plainfield, and but worked in Lower Manhattan, in Wall Street basically, barring the last 19 years, because I've been out on the West Coast now for 19 years. So I can't recall the exact exit, but you kind of know where I'm from. But let's see. Yeah, I've been teaching with Pacific Trading Academy for about 14, 15, somewhere in there years. It's been I can't recall, since the inception. And I wish I had is it Susan's psychic capacities, but no, I have a great interest in dark pool phenomena, and so, but I don't claim psychic, but I'm a technician primarily. So, and I got into the bit just by context, got into the business by default. I was had a completely different career trajectory when I got out of school, and by accident, through a series of whatever type of circumstantial events, changed I ran into a guy who was already a trader, and a successful trader at that, had an office in the Empire State Building, and I was duly impressed and sufficient to the point where it caused me to seek a new career. So that's what got me started. So I'm a technician. The subset of, I guess, type of analysis that I do is, curiously enough, market timing. And and I work on the principle or the underlying paradigm that the market's going to do what it does once its time has come. I certainly didn't create that, but I'm a proponent of that, of exercising and implementing those types of relationships. Not that I discount price. I do believe price discounts everything, but from an explanatory or fundamental cause and effect standpoint, I believe that price does what it does, and the type of returns we see are a consequential byproduct of certain time periods that have elapsed. So I start there and then look for certain alignments of all sorts, whether they be quantitative, technical, meaning from the charts, and or fundamental event streams that happen in day-to-day living. And when I get those greatest alignments, that's what where I see opportunities for value, and I look and then develop a strategy. In terms of my teaching, I've been working since the beginning, pure beginners, experts, and everything in between. As far as my own trading, a technician has universal purview, but I primarily focus on the indices, the ES, and I, in the last few years in particular, focus more on currency pairs, the Forex spot market. So that's what I do. Yeah, if that helps.
Awesome, you bet, Glenn. And Jim, Jim Kenney's joining us from the Options Professor. Jim, good to have you back. Give us, give all the audience a little bit about your background and what you do with the Options Professor.
Okay, well, the Option Professor is educational regarding the option trading that's out there, as far as all the different strategies. So, you know, we all know there's a lot of moving parts in options. Guys who are already in the business, they can talk the language very, very well. But there's a lot of people that are entering into the trading arena, and they could use a little bit of education on if they want to bet on volatility, what strategies would be that way. They want to bet against volatility, what strategies would be that way. If they want to use these options as insurance, again, what are the strategies and what's the use and the risk and the upside? And if they move one way or the other, how could you roll the positions? And so there's a lot to talk about for people that are not, fully informed on all the different things that are options. So for many, many, many years now, that's what we've been doing, and that's what we bring to the table.
Awesome, Jim. Appreciate it. A fellow options trader here, so we're kindred spirits there. Folks, if you're not familiar with me, my name's Matthew Buckley. My call sign's Whiz. I think my parents did love me at some point. That's not my God-given name. That's my call sign. I earned it flying the F-18 Hornet for the Navy for about 15 years. Graduated from the Navy Fighter Weapons School, which many of you know as Top Gun, and also flew 44 combat sorties over Iraq. Always was interested in finance growing up in South Jersey there. So another kindred spirit online here. It was either Navy, well, some would say prison or the Navy, so I ended up in the Navy, but was always interested in finance. In the early 90s, taught myself how to trade equity options, and more or less applied everything I was learning flying a fighter aircraft to trading, having a strategy, implementing tactics, contingency planning, managing risk. I know a lot of you are sitting there like, okay, the guy flew fighters off a carrier and he's going to talk to me about managing risk. Yeah, because as of whether you're an options trader or a fighter pilot, you want to minimize and eliminate all known risks. To channel my inner Rumsfeld, he had a great quote that said, there are known knowns, there are known unknowns, and then there are unknown unknowns. So you want to eliminate all the risks that you can before you get airborne. It worked really well for me. And then after I got done flying fighters for the Navy, I popped up on one of the largest volatility arbitrage firms, equity options firms in the world now, headquartered right there in the CBOT, the Chicago Board of Trade, Peak 6 Investments. I helped run Peak 6 Investments. I was the founder and CEO of the Options News Network. Yeah, I did feel a little bit like Valentine in Trading Places, little old retail trader stepping up and buying pork bellies and G.I. Joe with the Kung Fu grip. So it was pretty cool. I was the founder and CEO of the Options News Network, and then decided that Chicago, no offense to anybody from Chicago, but it's best left for people other than me, since I'm a beach guy and I love the warm weather. So that's my quick story, and I'm sticking to it. So, all right, guys, and gal, Stephanie, let's keep that same batting order. Stephanie, Glenn, and Jim. Let's. I'm going to mishmash a bunch of this stuff. So and it looks like a coin flip. I know you guys read all the. David sent it last night so we could get an early peek at it. Almost looks like a coin flip there, Stephanie, with the respondents saying, hey, which direction you think the S&P is going to go from the open this morning to Friday's close. So, Steph, what do you think, your confidence, and give us what's on your radar for the week?
All right. So I don't think. That's my number one rule. No thinking. I lose money every time I think. All I do is follow the dark pool. Can I just share my screen for a sec? Let's see.
Now, Steph, as you're sharing, pretend half these people just came from Mars. What's the dark pool?
Yeah. Oh, so the dark pool is where all the guys that pretty much control the market. I don't know if I'm going to be able to share the screen because I'm sharing it on another platform. But yeah, so 40% of all the trades, all the volume that is being done right now is being done in this alternative network called the dark pool. And if you follow them, you'll be psychic, just like me, right? So I'm going to tell you what the dark pool's been doing, because they've been selling hard the NASDAQ, the QQQs. So I just got another late sell print coming across at 143.85. Okay, right now the Nasdaq's trading at 143.25. So they sold it earlier this morning, but we had massive dark pool selling at 144.15 on the QQQs. Okay, so that's what I'm trading right now. I haven't had a lot of dark pool activity on the SPY, but we did have a 3.6 million sell print Thursday on Facebook. And we also had a very large sell print, dark pool sell print on the XLK, the tech ETF, 2.2 million at 58.15. So I've been bearish on the tech, on Facebook, and on the QQQs. As long as we stay below these sell prints, I'm just going to keep adding on to my put positions. However, I want you to watch a level on the SPY, the S&P 500, 246. 22 on the SPY, because we had 23 million dark pool trades there a couple weeks ago. That's a really serious level. If we've tested it a couple times last week. If we break below that, I will turn bearish. So I've been watching very carefully. A big part about trading, like Matthew said, it's about discipline, and I'm going to be disciplined and wait for a break below 246.22 on the SPY to be bearish on that sector.
Hey, Stephanie, so good job covering the tech and the NASDAQ. Give us a little bit of your crystal ball there on Apple. Do you think the market's they're holding their breath on Apple earnings, and then, is it going to be selling the news? What do you?
Well, look at Amazon. I mean, look at Google. That got crushed. Why is Apple so important? I mean, really, what are they doing? They don't sound like they have anything major coming out, right? So I don't really care about Apple. I don't think Apple's going to control this market. What Apple does or what it doesn't do. It looks like a hanging man candle on the daily chart, kind of. A couple days ago, I haven't seen any massive prints on Apple, but I'm going to tell you, Facebook was 3.6 million in the middle of the day. And I put it up on my dark pool app. If you're interested in getting that, just shoot me an email, Stephanie@thestockwhisperer.com. It'll be available this week at the Apple Store as well as the Google Play Store. We'll be going live. But if you want to be a beta tester this week, I will have that. But that's what I care about, is the prints. I can't trade something that I don't know where the big guys are buying and selling. Sure. I don't have advantage.
So what do you think by Friday, based on today's open? We're going to be open or closing Friday afternoon, closing bell higher or lower?
So I took a poll of my traders in my room, and they seem to think that we're going to be 45% of them said down, 35% said sideways, 20% said no clue. Nobody said up, which is interesting. Yeah, nobody said up. So I'm like, you know, but again, you know, you made me guess last time, if you remember when I was on the show with you, and I guessed right. Okay, but I didn't like guessing. All right, so I'm going to just give you the levels. All right, if we close today below 246.22 on the SPY, I'm going to say we're going down. We're definitely going down. Okay, that's a key level. If we close above, then I'm still bullish on the SPY. So that's my level.
Okay, so that's your canary in the coal mine. What was that? 20? What is it?
246.22.
246.22.
Yep.
Okay, excellent.
All right, I'm sticking to that level.
All right, that's your story. You're sticking to it. Glenn, how about you, my friend? Higher or lower by Friday, and what's on your radar for the week?
Well, I'm going to be the voice. Well, I'm not sure what Matthew's going to say, but I'm bullish through the end of the week. We are at and for a couple of I'll give that about a 67% probability based on what I'm looking at. I think we are at a critical point right now. I have four important cycles, the confluence of which I would attach about 80% reliability coming in between yesterday and today. So again, what I start with is projecting when points in time in the future, and I worked out this time window, if you will, the 2-day window between yesterday and today, about 6 weeks ago, and I'll indicate my subsequent dates. But the way I interpret it is by asking what is the trajectory of the price trend as it arrives at that temporal point. So most recently, if I look at the recent top from last Thursday, July 27, through where we are right now, the net translation is slightly lower. It's not real significant. I'm not seeing the degree of volatility that I would like, and it have, you know, make my analysis life simplistic, but rarely is that the case. Curious, I'm getting the same number. If you look at the bottom of last Thursday, the low price basis, the SEP S&P 2457, essentially one and the same as the number that Stefanie just gave, 246 basis the SPY or the QQ, whatever index she was looking at, but it's one and the same. All bets would be off if we break. I think Stefanie said if we close below that today, for me that's a little too. I wouldn't impose that on the market. It's too stringent. But if we at whatever point should break down below 24, the 246 level that Stefanie indicated, or based on the S&P, the futures, 2457 level, all bets would be off on my bet that I'm expecting higher prices. I don't think we're going to do that, though. Again, why is that? From a cause and effect standpoint, I expect, if you look at from the recent pivot point of last Thursday into where we are at this moment, we kind of have a doji intra-period going on right now on the daily chart on the S&P. I expect we're going to rally. And the reason that another factor I'm looking at here is if you go back a little further on the daily chart of the stock market, the S&P again, from June 29 bottom through last Thursday, the 27th top, you got a
Hello?
We might have lost you, Glenn. You might have sat on your mute button. Can you hear us?
Oh, yeah, I can hear you. Did I lose you?
No, we're good. You were talking about the end of June bottom there. Go ahead.
Yeah, if you look at the entire structure from the bottom on 629 through Thursday's top, last Thursday, 27, you can see your first wave ends at the top on July 3. Your correction 2, characteristically deep, is the bottom on 7.6. You got a perfect Fibonacci 1.618 extension, wave 3, theoretic form fitting the theory, 161, the top of 7.14, July 14. And you've got a little, ironically, it's not a truncated fifth, but you got a little extended fifth wave corresponding with the recent top of last Thursday. And then again, reiterating, coming full circle to where we are at the present, the market drifted lower from Thursday into where we are, albeit it's not that deep, but I expect my interpretation and the reason for my projection for expecting by the end of the week will be higher. What do you do at the market once the market reaches a pivot point? It reflects or caroms on it. That's why I expect the market to move higher for the balance of the week. But if I'm wrong, if whatever happens on any front, it should be to the extent where it takes out that bottom of July 27. It happens to be the same structure, this in the same bar form, the all-time high and at a significant low. If that 246 or 2457 basis the S&P is taken out, then I would have to, say I'm wrong, and then I change my strategy based on that contingency. But I just don't think that is going to happen. We'll see.
Glenn, what I know some of the macro stuff that caused Thursday's pullback. What a pullback, for God's sakes? What, we go down 5, 10, 15 points on the spoon.
That's all.
Everybody goes ape shit, right?
No. It's just it's a relative degree of price translation.
Correct.
It's negligible. It's not that much day to day, but I'm just saying that's how I have to start. In more or less, it hasn't done much. But if you had to assign one of the three general directions of motion, it went down from the top of Thursday through where
Correct.
we're trading at the moment. So if right now corresponds to what I expect will be a point in time to which the market is especially sensitive, and you're going to see a corresponding reaction. What is the most basic? Now, there's a caveat to this. There is an alternate type of change. When I project my time points, the actual meaning is it means that the point is more vulnerable or is going to exhibit a greater probability to change. One type of change is the absolute 180-degree shift of trend, but that's not the only. Another type of change where we would see a continuation out and more or less in the same direction, albeit maybe a different velocity, a deceleration or an acceleration of velocity. So that's what further complicates it. I've done research that show when a market reaches a time point, about 70% of the time, if it immediately responds, it's going to be an outright 180-degree shift. If it hangs out in that neighborhood, in other words, you see a period of consolidation, more often than that, that correlates with a breakout where the market breaks in the direction to which it was previously trending. But that's a 70% phenomenon. So it's a challenging point of interpretation. It's not immediately always crystal clear what's going to happen, but I look to find other factors or points or events that would serve to tip the probabilistic balance one direction or the other. But so on total, again, I'm about 67% expecting a higher close by Friday. It would be my thought. Based on a combination of the time we are right now, what was the market doing at the time we arrived at this point right now, present time, what I call the now moment, it's going down. Therefore, I expect it's more likely to rebound in the most obvious way to the upside. I would expect to find a confluence of, fundamental events as we progress into the week that would serve to, bring that about as catalysts. So we'll see. And then beyond that, and I may have occasion later in the future on the remaining questions too. My next time point is later in the month, August 21st, and I've already projected out beyond that into September 9/18. Well, I may talk about that later, but
yeah, we'll definitely get to that, Glenn. We'll go from being tactical right now. We'll get a little bit more operational, strategic, because I want to know everybody's take a little bit past Friday as well, because everybody's wanting to know about that. I mean, geez, people are starting to already talk about the debt ceiling debacle potentially in October, and so I'll get your take strategically here in a little bit. Jim, how about you, man? How's your week looking? You think higher or lower by Friday? What's your probability, and what's on the options professor radar, so to speak?
Okay, well, as far as what you were saying earlier, what do we know and what we don't know? We know that the high on the S&P is 2485 ballpark. Like Stefanie was saying, we know there's that 2460 area, and then we know there's 2400. So what are the transports doing? They seem like they've given up the idea of making new highs. And what has the NASDAQ done? Well, it's very close to that low point of 2460 the same day that the S&P hit that. So the NASDAQ is on the verge of taking out that price point from that day. And so again, the market is in an uptrend. The market has been stable. Selling the market has been a rough racket. But I would say that it is going to fade by the end of the week. And my confidence level right now would be about 50-50. But if we take out 2460, that would obviously jump significantly. And again, we have end of month options here today. So that could be keeping the market where it is, so they can try to get these options to go to zero and collect their premiums, the market makers. So again, today's end of month, and that might be a factor today. Obviously, looking further down the road, We've got unemployment on Friday, which is going to be big. The unemployment number that came out of the PMI report today was slowing, so that could be a warning signal for Friday. Who knows? Pending home sales snapped a 3-month decline today on the PMI report. PMI still well above 50. The economy is strong, and the earnings have been strong, and these are great companies. So why would you even think about doing any selling? The only reason would be you think the valuations are out of line, and you think that obviously reverting back to the mean towards some of these longer-term moving averages is going to occur at some point. And at some point is the big question. So obviously, if you wait for some more confirmation of getting a rollover, like your 2460 getting taken out, like your 2400 getting taken out, your odds of being possibly correct would increase. The problem is that there is an extremely large stop loss underneath the market. And where is this stop loss? It's all the people that have been writing puts like robots for the last year. And every month that goes by, that pool's, you talk about dark pools, I don't know what you call this pool, maybe the pool with no water in it at some point, but there's a huge amount of people who've been writing the puts, and every month they've been winning, which you could count how many months that they've been winning, a ton. So that is a bigger pool, and if anything were to occur that would execute them to obviously cover, then you have the risk of what? You have the risk of the VIX spiking up. You've got the risk of the market having a precipitous drop. Now, again, the big question is when. And obviously, when the market's up in this level, the when is not happening. But in my opinion, the when is getting closer to happening rather than further away. So that was just a little bit of my view, and I'll give you more of my input as the other questions arise later in the broadcast.
That's some great points there, Jim, especially with the VIX and the writer of puts. Just like being short vol, it's been a quote great trade all year. I would push my own mother in front of a train rather than get short vol. I hope all the put writers have been making some nice premium, because the day that they wake up and they're wrong and get wiped out, I hope all the little dimes they've been picking up have been worth getting run over by the steamrollers. You have to be very, very careful about doing that stuff, folks, and we'll talk about that. Here's the way I think about things here at TGO real quick. Our methodology, it's not rocket surgery, right? Strategic, operational, and tactical. Right now, many of the folks listening on this webinar, they're very, very tactical, and so is this market, meaning, I don't even know what I'm doing for lunch, Whiz, let alone out to January of 2019. So what I want to do, I'm going to give a quick outlook, especially just for the week. Usually I'm, like Glenn was talking about, hey, I'm going to talk about, out maybe in the next month, but living in today's market and what's going on around the world, let alone DC, each hour seems like a month. Whether it's a tweet or a macroeconomic development, it's incredible. So I'll give you a take real quick: strategic around the world, operational, what's going on here in the U.S., and then I can talk about trade. So real quick, here's. And Jim did a great job of focusing tactically on what's going on in the week. Obviously, all eyes will be on non-farm payroll on Friday, because it's it could be, what was it last time, 220. It was a blistering 222. Trump's all over Twitter. Huge jobs created. I'd say the economy's good. I don't think it's great yet, because we do get some brown shoots along with some of these green shoots. I just think there's a very dovish Janet out there that's cradling our head real quick. But guys, I got to be honest with you. One of the things, especially with my former military background, I've cruised in these waters. I've done strike planning against North Korea. This is getting serious. Before the meeting today, Trump said, "We'll handle North Korea. It will be handled. We handle everything." Folks, I hope before we take real shots at North Korea, he takes some soft shots at China. Yeah, they're our banker, and they could screw us pretty damn quick. But folks, we are, one of my wizisms that my members know is the market only cares when it cares. It's not like when the cameras aren't on North Korea, the guy, some young guy turns around to all his troops and says, "Hey guys, nobody's paying attention to us. Shut it down." Oh, wait, the cameras are back on. This is all going on, folks. And whether you're watching comedy, you know, I call CNBC Comedy Central. If you're sitting there watching Comedy Central, they don't give a shit about this. They will give a shit when 4 million South Koreans are dead because somebody accidentally fired an artillery shell. This is bad. I'm telling you, this is bad. And a VIX with a, what was it, an 8 print last week is stupid. So we're going to, you know, here's the headline in the Journal today. As Washington churns, the world grows more dangerous. We are one international... It's funny, Glenn and I were kind of going back. It's funny that we call like last Thursday a pullback. Are you kidding me? When I was in Chicago a month or two ago, I went back to see some buddies, and they're like, Whiz, we're terrified, man. We have traders that are in their late 20s, you know, 30s, who've never seen a down market. So when something bad happens, folks, you're not even going to hear them yell fire. You're going to be trampled over as all the institutional money's gone, and you're going to be sitting there staring at your E-Trade account going, why is there no liquidity? So folks, my biggest issue for the week, and I'll tell you, my job is to scare the hell out of you. So if it doesn't happen, we're pleasantly surprised. But let me pull up my used to be options house. I sent out a weekly options. I think the market's going higher by Friday. And what's my probability? Well, I can tell you my probability because using at the money volatility, there's a 75.28% probability. I sold the, I hate this new platform, man. What the hell was it? The 20, I trade SPX, the 2455, 2450. And I know a lot, I usually do my weekly options brief every Wednesday at 1. So all my members are joining me in here. Guys, you guys should have gotten a text alert and the email on this. And I like Stefanie's point, and I like Glenn's point right around here. So I gave myself a little, you know, I'm fishing in those same waters. The market's going higher, guys. I hate using that term, climbing a wall of worry, but when you look at everything that's going on out here, let me just click through these real quick. You ready? Jeffrey Gunlock, which I love saying I'm in the same audience. I don't manage 95 billion, but he and I and about 3 other dudes were the only guys in the entire financial space that predicted a Trump victory and a market rally of at least 10%. Both of us said that. This guy is buying a crap load of VIX puts. Look at this. JP Morgan, investors are starting to hedge against a crash. The VIX trade nobody's talking about. The debt ceiling. VIX crashes a record low. This 1x2 on the VIX last Monday, somebody bet $262 million that the VIX is going to double from 12 to 25-ish by October. I mean, this is... And guess what? And Jim was talking about all the put writers. Well, guess what? There's 40 billion in VIX related trades, you know, with all the vol linked ETFs, 40 billion, folks, and 3/4 of that is short. Now, remember this, ladies and gentlemen, the VIX, the average VIX is at, let's round up if you'll allow me, is a 20. What do we have? I didn't even look today. Who cares, right? A 9-ish. Are you kidding me, folks? You have got to be getting long vol right now. So even this is, and Stefanie and I were joking about this before we went on the air. This is a hold your nose rally. Look at these violent pullbacks. There's the first time the idiot Republicans couldn't get Obamacare repealed. They vote, what, 63 times to repeal it under Obama and twice under a Republican. They can't do it. Market goes freak mode. Here's the Jim Comey memo. Holy crap, they're going to impeach Trump. No, well, it turns out Comey's a leaker, and he's a felon, and he should end up in prison. Market rebounds. Here's a little bit of Mario Draghi, and here's the Donald Trump Jr. emails. Holy crap, and then the market goes up. So in the absence of horrific either macro data, which I don't even think the macro data being horrific is going to suck. I told my members a week and a half ago, we are officially back in bizarro market where good news is good news, bad news is good news, and awful news is great news. So unless we get, you know, oil imploding, which it ain't, and or North Korea thing, guys, you got to hold your nose and this thing goes up. Very long answer to the very short question. We're higher by Friday, putting on a weekly bull put spread, and I just got to shake my head. So, you know, hopefully, you know, you got to get long vol here, guys. Write this down. When vol is cheap, you buy it. When it's expensive, you sell it. And it is time to get long vol. So that's my workout for the day. Again, I hate being Eeyore and Winnie the Pooh. You know, oh, hey, I won the lottery. Well, you got to pay taxes. Well, guess what, folks? Like I said, instead of thinking this market is sunshine, unicorns, and lollipops, and then getting obliterated, why don't you think that this thing's going to go to hell in a handbasket? Be prepared, and if it doesn't, you're smiled. I came up with a new word a couple weeks ago for my members. It's called a tredge. It's a trade and a hedge, because usually I tell my members, you never lose money on a hedge. Well, Whiz, I lost $3,000. No, you didn't. I don't sit at my kitchen table and go, oh my God, I'm losing money to USA each month with my auto, home, and life. You just don't think that way. So a tredge is like, I think in the next month or a couple weeks, something's going to happen to freak the market the hell out. I don't know what it is. My call sign is Whiz, not Nostradamus. So I think it's going to make money, but even if it doesn't, I'm hedged. So we came up with a new word called a tredge. And if you're not tredged right now in this market, you're an idiot. All offense intended. This is ridiculous, folks. If you got guys like Gunlock, you know, selling their own mother to get long ball, I think everybody listening to us should be doing that as well. So, Steph, how do you hedge? I know you're a very tactical trader. Why don't we move into that type of subject? Because I don't know if you guys are worried as I am, or if I'm doing the sky is falling. You know, broken clocks right twice a day. But what are you looking at, or what's scaring the hell out of you in this market, or are you scared?
Well, I'm never scared.
That's a great answer.
Look, I've been doing this for 24 years, and I have 2 teenagers. So really, what am I going to be scared of?
Yeah, that's a good point.
So nothing really scares me. Now, first of all, I am a day trader. I am also an overnight momentum swing trader, where I get into positions near the close and I exit out of them the next day. And I'm a longer term trader. So I take advantage of everything, every single print. So I was telling you about my app. I'm going to put it on my screen here. So last Thursday, why did the market go down? Why did the tech get killed? Well, we had a massive sell print on Facebook. And this is my tweet here where I wrote, massive Facebook print. Is that you, Zuckerberg? 3.6 million, 174.60, bullish above 174, bearish below 170. Bearish below 174. So this happened at 11:37, and you can see Facebook was just, kind of sitting there, didn't do anything. As soon as it fell below 174, I put on some puts. So I trade stocks, I trade options, I watch the futures, and some of my traders in my room trade Forex and Bitcoin. But on this trade, I wanted to put a low-risk trade, so I bought the 172.50 puts and the 170 puts, which were like 15 cents. This thing fell in 20 minutes. And I made 300% ROI in the middle of lunch, which was great. I was eating my quinoa bowl and making money because I'm watching every single print. And before that, like I told you before, we had this XLK print, huge, 2.2 million, and it dropped as well. So again, I'm not scared because we're going to see the prints way before they happen, and I'm going to tweet them out on my app, and of course trade them live in my trading room. So I'll hedge myself by buying really cheap puts. I always have them on just in case. We never know what we're going to wake up to. And I'm with you, Matthew. Right now, seasonality, there's a lot of charts that point to July 2017 being a topping point from now till October. So yeah, we are due for something, but I am not going to trade on what I think, what I hope. And before I said if we close below 246.22, and I didn't mean like today. I mean, obviously, if we close below that today, I'll be bearish. But it could happen tomorrow. It could happen Thursday, Friday, next week. That's always going to be my level right now, unless we have a bigger dark pool level that can happen at any time. But like right now, just keep your eye on Gap stores because I'm seeing some very large, unusual prints. In fact, I would be tweeting right now, but I'm doing the show. Right here, 23.75, if you trade that, because it's unusual. We saw one earlier, which I did tweet about, but this one, let's see if I can, no, I can't find it right here, but we had to, so this is huge, 23.75. It's definitely going to be a mover. Right now it's sitting above it, but I'll be bullish above 23.87. If it breaks higher than that, I'll be bearish below 23.60. So that's pretty much, what I do. I have seen a large amount of money come into gold before the Fed meetings the other day. We had 15 million traded on IAU, which is the gold trust. 15 million dark pool. This is the biggest level I've seen in a very, very long time. In fact, the last time I saw such a big level was back here. All right here in 2016. The end of January, beginning of February, we had about 20 million, and you can see what it did. IAU is a very slow mover, so I do trade GLD. I have a position on alongside right now. So yeah, I'm loving gold. That's how I'm preparing. You know, the money has to move somewhere, and so I'm seeing money flow go in that direction.
Well, and you know, to use a very well-worn analogy, you know, I guess you can say we're the best house in a bad neighborhood. You know, where else are you going to put your money right now? In a Folgers can out in the yard. So agreed. Getting long gold, and you know, when you think the world could potentially go to hell in a handbasket, it's not a bad trade.
Real gold. But I would buy real gold coins, not just the paper. So I really like that trade right now.
Correct. An AR-15 and a bunch of gold coins sounds like something I have very close by. Glenn, what do you think about hedging and volatility and just where we are overall?
Yeah, I like what you said, Matthew. I do have a lot of objective concerns based on some of the technicals, the level of short puts, the VIX level. Yeah, that is a sick number currently. To some extent, I see the broader index slightly. It's, you know, I'm getting some on some of the standard oscillators, overbought readings. There's slight degree indications of divergence. So all of that does indicate we are. And I think Matthew indicated there's a shorter amount of time rather than a greater amount of time for which something of great significance. I expect a lot of, we're building, and it's compressing, and the pressure is building. I stack that against the other, the bullish componentry to this market here. The pure trend. If you and you pointed out, you showed your screen where you saw and you item by item correlated the events that were occurring fundamentally with the pullbacks. Measure the magnitude of the pullbacks as a percentage or nominal levels, though, and you still see structurally, from a pure trend standpoint, a succession of higher and higher tops and higher bottoms. As long as either one of those are intact, I still maintain we are, generically speaking, in a bull market. Even though when I take into account all of the fundamental factors and some of the current technical readings, Stefanie said she wasn't fearful. I try not to be, because I want to be objective and follow the charts. So what gives me a little comfort in you know, the chart structure, but primarily I always go back to the starting point. We are at a critical juncture, I expect, right now. Today, it just happens though. I'm tooting the horn of some of the tools that I utilize. I picked to the day. If you go back November 9, and I remember it was about a month before the presidential election. I was one of the panelists on the program, and as a final question, they asked, who guys do we think is going to win the election? And I said, I have no idea, but I can tell you I have about 95% probability that whoever wins the stock market will love it. And that was simply because I had projected the Friday before the election. I can't remember the date. The November 9 was I think the election, if I recall. But I had projected that weeks in advance. So all I knew is so I was looking at the market, what was its trend coming into that date, and what was I expecting the rebound to occur. So again, my next date is 8/21. August 21st. What happens in the next few sessions, I expect, will be very telling. But combined with the wave structure I'm seeing right now, I expect, again, higher prices. That's primarily it. But I like your concept. I like short term, like a bull call spread but I like the Tredge concept right now.
Yeah,
when this thing hits, it's going to, it won't be looking to see what's happening. It'll be what happened.
That's exactly.
It'll be an after fact after you've been trampled if you are not correctly hedged. Clearly. That's
exactly right. People are going to be, you know, rubbing their head going, did you get the license plate of what the hell just happened? Right. And it's a great, and folks, if you listen to the pros here on the round table here, even if you don't know when something's going to happen or what it's going to be, you can still potentially make money. Glenn, the Brexit, I put on VXX, bullish double verticals, which is a bull put spread, which funds a bull call spread. So it's like an afterburner trade. I didn't know how the hell the Brits were going to vote. I just knew that the uncertainty was going to increase. So before they even voted, bullish double vertical as vol spiked. Before they even voted, we unwound that trade and did what? We rolled inverted and did a bearish double vertical. Same thing with the election. I knew Trump was going to win, but still the VIX popped and then it dropped. So folks, if you're of the mindset that, you know what, something has got to happen in the X amount of time to potentially freak this market the hell out, you should probably be looking at a trade. So Jim, I know we're speaking your language as far as options. What do you teach at the option professor about if you're a little freaked out, as some of us might be? What are you looking at doing?
Well, again, I've been doing this for decades, so I'll just tell you, what I've been telling people in the last month or so going into the earnings season is that, we've got some things happening that are not, shall we say, proven risk yet, but what I would call probability risk. And that would include the VIX being under 10 for a ridiculous amount of time, unprecedented amount of time, the huge percentage of passive investing going on, the amount of people who use ETFs and things like that are just off the chart. I like to say that some of those people might be called asleep at the wheel. And you've got valuations that are extremely large. And you've also got a tremendous amount of debt that's in corporations and lower rated debt because people are so yield hungry. They're buying debt from very low rated companies just to get the yield, totally taking risk and throwing it out the window. Now, the Alfred E. Newman thing works for a while, and it has been working. But at some point, Alfred gets nailed. And so if you believe, as I believe, that the probabilities are suggesting, and see, that's the difference between, shall we say, thinking about a strategy that might be like an insurance strategy versus one like Whiz mentioned where, hey, I'm from the show me state. There's no proof it's under 2460. So if I'm putting on a real trade with real money, I'm going to do what? I'm going to put on a trade based on what I know and what I see. They haven't been able to take out 2460. Right? So that's a very understandable trade that Whiz was talking about. But the point I'm saying is for larger amounts of money, for bigger amounts of money that you would prefer not to go through a big roller coaster, that you might start investigating, as I've been talking about as we went into season here, is the collar strategy, which is basically where you're doing the covered call writing and then the premium you received off the covered call funds your insurance. And then you're bracketing your monies. You're giving your money parameters. Without something like that in place, there is really no parameter on your money. If it goes through the roof, God bless you. Go out and have champagne and steak tartare. If they start hitting these people that are short puts underneath the market, and you have an algorithm type of drop, then you're going to be closing out the tartare trade, and you're going to be getting over to In-N-Out Burger. Not a bad place to go, but totally a different environment, right? So
exactly.
my feeling is this. There's a possibility at some point that we always will go back to the mean, which means these long-term moving averages that I'm seeing, that I follow, they are so far underneath the market now that it is rarefied air. And how Amazon went from 1083 to 993 before you can spell Jeff Bezos. It's a great company. They got great earnings. We're not knocking these companies. These are fabulous companies. Starbucks is not a bad company, but it's not at 63 anymore, is it? So the point being is why would you have used the collar? Because you want to go to bed at night knowing a little bit about what your equity will be over a period of time.
Correct.
And if you do an out-of-the-money call, you're still in the game up until the strike price. And then you can figure out what you want to do with that call if you get a run. But at least you've got a net underneath. Mm-hmm. And when you're at 2,500 on the S&P and you're at 6,400 on the comp, and you got all these people doing passive investing, and you got valuations where they are, and you've got an administration. I'm not political, but obviously both sides of the aisle can't agree on what time of day it is. It may be tough for them to go down there and get Bernie Sanders to say, we're giving Apple, who's only worth about $1 trillion, $500 billion, we're going to give them a tax break.
Tax break, exactly.
And, but while we're doing that, we're going to cut those co-pays, to the guy who made 14 cents last week down at Walmart. You see, I don't know how these things are going to fly, but I would imagine the Wright brothers might have a better chance of getting it off the ground. So the point being is that if we're going in now, like I say, if you start breaking 2460 and 2400, I'm going to go from having somebody who has concerns to having some evidence. Right now, I have no evidence, and that's why the story is not as compelling. Okay, but what's the problem is when they start hitting these people's puts, it's going to be probably something that happens really rapidly. And like I say, they didn't give you a half an hour to get out of Amazon at 1100.
Correct.
They didn't give you 2 weeks to ask Uncle Harry what he thinks, who's down there in Sarasota. So the bottom line is my suggestion is investigate your collar strategies where the covered calls will pay for your insurance. You're still in the ball game. You'll have a strike price above the market if it works out mathematically. At that point, you can rearrange that strike if you feel like it. And then, of course, married puts. Some of these puts are ridiculously low. And if you look further out in time, sometimes you look at a 5-month put, it'll be at $1.50, and a 12-month put might be at $1.75. Yep. So realize that obviously if you can extend your insurance by 6 months and only pay 50 cents more, that's a pretty good deal.
That's the definition of a no-brainer.
That's right.
It's a great point, Jim. And folks, as he explained that tactic, just listen to these words. You ready? Costless collar. I live down here in Boca, man. So anything, whenever you say the word costless, it's a stampede. So, Jim's talking about a tactic where, like you said, you can sell upside calls to buy some downside insurance. So have somebody come into your kitchen and write you a check for your USAA bill. I mean and that's why he's saying you can go to bed at night. So it's a great tactic that Jim's talking about.
The only caveat you have to put in is that there is an opportunity risk above the upper strike, and that can be addressed when and if it gets near that strike by either buying it back and rolling it up, or just buying it back and saying, okay, that didn't work out, but I'm making so much on the stock, it's an irrelevant thing.
Well, exactly, Jim. And if that's the worst thing that happens, that's a good thing. So
there'll be a line wrapped around your building if that's the worst thing that ever happened to anybody's account.
That's exactly right. And I know I probably scared the hell out of everybody saying the risk is to the downside, but I mean, folks, this in the absence, like I said, in the absence of something literally horrific, the invisible hand of God is pulling us up. All right, guys, closing stretch here, about 8-10 minutes here. Steph, give us a nice, what's the closest alligator to your boat? I know you were looking at some unusual activity there a little bit ago, but give us a nice, meaty, juicy trade you're giving to your members, or you can pass on to these folks here.
All right. Well, I do a whisper of the day every morning. In fact, just give me a second to get my screen.
Hey, Stephanie, could I ask you a quick question?
Sure.
Thanks. I was looking at a company, Macy's, and I had heard about how the total valuation is about $7 billion, and the real estate alone is like $15 billion. I don't know if those numbers are accurate, but of course we know 34th Street has got to be worth a lot of money, right? And the stock went down towards 21, and it had made a bit of a turn here. Nothing to write home about. But I was wondering if the dark pool was showing anything happening, because you had mentioned Gap, so that's obviously an apparel.
Yes.
And I was wondering if you see anything on Macy's.
Yeah. Oh, wow. That's a great question. Let me get my dark pool. Right. I use Live Pro software to back test, and I can go back to 2011, and I can see any day if there was a lot of dark pool activity, and this is like insane. So let's just
it made its turn around, around a week or two ago.
Yeah, I can see that. I have a high volume day right here on the 27th, and I'm just curious to see if we had any large prints on that day. We did have a huge print on XRT, the retail ETF,
right?
Which I just tweeted about, but I don't. So which day? Is there any particular day?
Well, the turn appears to happen. Let me just double check here real quick. I mean, there's a ballpark date.
Yeah, because I can actually search it.
It looks like it bottomed out on
usually.
Maybe I don't have the actual date here, but it would be somewhere in the first week or so of July.
Yeah, so July 10th, we did have a couple of big prints. Now, during lunchtime is when we see them, and 2170 was where the big guys started to come in there.
Right.
At 21, always during lunch, 11:30. I showed you that Facebook print. That was also right around 11 o'clock. So that's why I eat lunch at my desk every single day. And we see prints on everything. We saw a 3 million print on Target last week. Look at this. It's been an amazing trade. 3 million about a week and a half ago. So yeah, so it's been great. I mean, every day there's a huge print. on different stocks, and I really just search for the unusual stuff. So this morning I do a Whisper of the Day video. It's free every morning. My hot stock pick. I have a 90% success rate on it. I've been doing it for 4 years. You can go to my channel, listen to every single one. But today, I was bearish on natural gas. I spotted pre-market selling this morning on UNG, and you can listen to the video at $6.38. And this is really slow, so I do prefer to trade UGAS or DGAS. You can buy DGAS. This goes up when natural gas goes down. So that's one trade that I called out this morning. Also AMD. Bearish below 14. I spotted a bid this morning at 14.03. That's on the video, and I was bearish below 14. This has been a great short today, and I don't always go short everything. It's just been that all the big prints have been selling lately. I mean, people are taking profits on various stocks and so forth. So again, I'm pretty much just trading what's coming across. I actually strangled GPS. So when I don't know if it's a buy print or a sell print, I'll put on a strangle, just pretty much making money as long as it moves. If it goes sideways, it's not going to work out so well. But definitely keep your eye on GPS and gold. We had a pretty big print on GDX today, actually, at 22.92. 800,000. So I'm bullish. The miners have been lagging the actual gold, but I will be bullish on GDX if it could break above 23. So I mean, those are things that I'm just watching, right now. If you ask me in an hour, probably be watching a couple other stuff as well.
Awesome, good stuff, Stefanie. Glenn, how about you? What's a good tactical or long-term trade that you could throw out?
Yeah, just a couple of points. When with brief reference to the Macy's situation, if my thought is I'm looking at what could be the formation of an inverse head and shoulders, I wouldn't buy it here. We could have a key reversal today, at a short term, but it's still time left in the session. I don't know. But in terms of where we are, putting in a little context, if it helps, Jim, we've got some critical support at 21.5, 21.51 to be exact. I would buy it on a breakout above the high of July 5th, which came in at 24.65. What are we trading? 23.5 right now, 23.56. But I wouldn't do anything with it at the moment. But on a break above 24.65, I like the long side of Macy's. But I think prior to doing that, I would expect it's more likely to test that support at around 21.51, and if it does that, that forms an inverse or upside down head and shoulders, and then you'd have a chart pattern standpoint to look to it and that initiate a trade as well, just if that gives any context on that. But what was the Matthew? What was the question again? What are we? Are just looking for a trade?
Yeah.
I like. Aligned with Stefanie, I'm bullish the metals. In particular, I trade silver more frequently, so I do expect silver for a number of reasons. And I'm looking at this is a long-term position trade.
I like silver too. I did spot a buy print on USIL. Sorry.
Yeah, and I don't know who was it. Someone mentioned buying coins. I do. I've recently, just in the last year or so, gotten into cryptos. So I do Bitcoin, Ethereum. I'm looking at NEO as a Chinese play as well, but tangentially. But what I like here is a trade, a position trade. If you get my levels here, the bottom that came in on.
Hey Glenn, if you're trying to, are you trying to share your screen? Because I'm.
That was I realized I hadn't. Hold on a second.
Probably should have told you earlier. My bad.
Yeah, no, yeah, that bottom in the I expect it's the same for GC, but in gold, silver, July 10th, I expect is the start of a long-term wave 3. My time point, and here's what I expect. I expect continuation of trend upward for silver and gold through August 18. That's my next important time point for the precious metal sector. So if you look at the long-term chart going back to December of 15, if you look at all the structure, I believe that bottom that came in, yeah, I lost my perspective here, but July 10th, I believe, is the start of an impulsive wave, and I expect that will last through the 18th of August. So from a proportionality standpoint, how far can this thing go? I expect it's more or less going to run unabated through that point in time to the upside. So I like that. Any strategy that would exploit that, depending on what type of, your style of trading, but I'm bullish the metals in particular, and I like buying coins as well. So, but I just do silver, so that's a play I like. I've also been long in the euro. On the forex side, right now I wouldn't buy it. We're a little overbought and a little pricey. I'd wait for pullback. So my long-term projection, I expect further appreciation for euro USD through into September, through the month of August. So that's a play I like as well. Those are the two big things. Long the metals, in particular, I trade silver, and long euro. I like that as well.
Great calls, man. Couldn't agree more. Especially
another.
Go ahead.
Oh, yeah. One final thought. I forgot to mention, from an intermarket standpoint on the stock market, I follow the bond market, and I expect we're going to see further appreciation in bonds, and I expect stocks. That's another, from a capital flow perspective. I expect the equity sector to follow suit. And again, I don't start with the fundamentals, but taking into account the announcement by Janet last week about, was it in September now, they're going to be taking paper off the balance sheet, indirectly serving to raise rates, and I think that will, and so if you look at the response in the market, the equity market's still rising in an announcement like that, and that further suggests that they're going to delay a rate hike until the end of the year. From that standpoint, I expect that will provide, could be another factor you could look to that's providing support to the stock market. But that said, I think it's less time than 3-6 months ago now, and when that thing hits, whether it's my next time point, August 21st, or beyond that, the subsequent one I projected, September 18, it will be rapid decline, very rapid.
Yep. Yeah, Janet, the Fed's going to be there until they're not, and then if the market realizes that they're not, and there is no safety net underneath us, it should be pretty interesting. Jim, how about you? What's a good potential trade you could talk to?
Well, just rather than, because again, Option Professor just goes into the different strategies, and then obviously people pick their own things. But we did cover quite a bit of reasoning why some of these defensive strategies, we're entering football season. So some of you guys who know football know that sometimes the best offense is a good defense. Anybody know that or ever heard that one before?
Damn right.
Anyway, for people who know what a pigskin looks like, that's basically a theory sometimes. At any rate, my point being is that as we enter the August, September, and October timeframe, this is something to at least be aware of, particularly for some people who are not totally proficient in the options area. Don't fight the tape has always been a good motto. So if we start taking out the 2460s and the 2400s, obviously the need for this type of defense may increase. And then don't fight the Fed. The Fed is saying inflation will be coming back at some point. So obviously that's probably why the gold and the silver is getting a bid right now. And then, of course, that 10-year note, if we get above 2.4, that would be a warning sign. Above 2.6 would probably increase the odds that we're going to 3% this year, like a lot of people have predicted. The odds of that would be very high. So if we don't get above those levels, obviously these people could be wrong. At any rate, the strategies to learn would be your collar strategy, your married puts, and then look how much time you can buy. So even the further out ones don't cost very much money. That insurance would extend. And then, of course, Stefanie mentioned the strategy of straddles. When you've got low premiums and premiums are low, why the heck not buy both sides? Then if you're dead wrong, which can obviously happen quite often, you're actually dead right because the other side is paying off big time. So the strategies are out there, but you got to know the use and the risk of them, and then you got to employ them at the right time. So at Option Professor, the DVDs will get you done on that.
Awesome, good stuff. And folks, I kind of, since I'm going last here, and to make up for time, I kind of gave you my what I was like in there, that weekly bull put spread. But I think maybe Thursday I'm going to have a pop-up webinar, so keep an eye on your email, because we got to take a look at a trend here with volatility in the gutter here, really, folks. And if you don't understand the VIX, you're technically not, it's weird to say, it's like putting instant coffee in the microwave. When you're trading the VIX, you're like not trading the VIX, right? You're trading the futures, 30 days out, S&P 500, the puts and calls. So again, an 8-hour lecture on that stuff that I'm sure Jim could really help you out with. My eyes glaze over. But the point being here, guys, just remember this and write it down. When vol's cheap, you buy it. When it's expensive, you sell it. And I guarantee you, when you start seeing in the Journal or Zero Hedge or other sites where mom and pop are starting to talk about the VIX being stupidly low, I get the whole, oh, now it's a crowded trade, Whiz. Don't give me that crap. If North Korea, Russia, now Iran everybody see Iran's firing off bottle rockets, or one of our guided missile destroyers shot across the bow of a patrol boat the other day. I mean, this stuff is going on and you don't know about it. So by the time you look at the bottom of the screen on Comedy Central there on CNBC and something is horrific is happening, I think like Glenn hit it, you know, you're going to be laying on the ground in the movie theater as the institutional and the dark pools like Stefanie's covered, you know, with wearing their golf cleats have trampled all over you. So if you don't have a trudge on or a hedge on, you're a fool. And trust me, we had this saying in the squadron, right? You never lose when you're buying for your buddy. Well, guess what? You're never losing when you're getting hedged right now, especially if you've been banking some pretty nice profits in this Trump rally since the election. This thing is getting stupid. Take some money off the table and put it into a hedge. Okay. Now, you know, it's like putting my kids in bubble wrap and putting them in the room. You know, you can't be fully hedged, but at least understand that, you know, as everything's getting obliterated, you can potentially make some money. That'll help you sleep better at night. And definitely look up Jim with his costless collar type of concept if you have any questions. So, all right, folks, let's go ahead and wrap it up on that. Stefanie, let us know how everybody can get in touch with you and what you do there at thestockwhisperer.com.
All right, yeah, I got a meeting to do actually in my live trading room, the Java Pit. You can go to my website and you can sign up. We have a trial right now for 30 days, $9.95. That's it, 30 days. Try us out. I have no salespeople. People come because other people love us and they tell people. And again, stay tuned. My Dark Pool app is going live. We've been beta testing it for a couple months, and we are going live this week. So I'm really excited. You can get that at the Google Play Store or the Android store. Just search Dark Pool and you'll see the W. And just go to my website, www.thestockwhisperer.com.
Awesome. Okay. And Glenn.
Sure. You can reach us at you can check out our website, www.PacificTradingAcademy.com. The toll-free 800-339-8588. I and my coworkers just do all manner of instruction. I teach technical analysis, beginners, experts, everything in between. I also do option teaching, but primarily focus on the basic chart analysis instruction and whatever level you are, and offer good strategies as well. So happy to be here again, guys. Thanks again.
All right, Glenn, nice job. And Jim.
Sure. I'm the content provider for Option Professor. And to contact Option Professor, just shoot them an email, optionprofessor@gmail.com, and they can get back to you.
Awesome, folks. And again, Matthew Buckley, call sign Whiz with Top Gun Options. Like I said, we might do a webinar later. And actually, I'm going to do a webinar probably Thursday. So just keep an eye on your email. We're going to talk about this Trudge concept because, to Stefanie's point, tongue-in-cheek, I say jokingly, I'm a little scared right now. When you try and land aboard a ship at night in bad weather in the Indian Ocean, not too much scares you, especially when you're flying over Iraq and people want to kill you. But this market is creeping me out a little bit to the point where I always want to. I never went into maintenance control on board the carrier before I went flying, and the chief looked at me and said, "Hey, Lieutenant Buckley, the jet we've assigned you today doesn't have an ejection seat. You cool with that?" I'd be the village idiot. You can't fly around this market right now like this. Trading's a form of combat, folks, when you think about it. Somebody's going to win and somebody's going to get their ass handed to them. And I've been on the right side of that trade for a while, and I don't plan on changing anytime soon. The easiest thing to do to just find out what we do here, I do a daily SITREP. I'm going to do it after I get off right now. Head to go.topgunoptions.com/SITREP. SITREP. I do a 5 to 10 minute daily video about what's going on, closest alligators to the boat, potential actionable trades, and also any pop-up webinars that we have. Okay. All right, folks. So with that, thanks everybody, Stefanie, Glenn, and Jim. Another great trader roundtable. With that, I'm going to throw it back to David to wrap up for us, my friend.
All right. Thanks everyone. Great show. Just want to remind everyone watching to be sure to hit the YouTube subscribe button if you haven't yet, to get updates on future shows. Also, be sure to join us next Monday, August 7th. Andrew Keene, Fausto Puglisi, and Rob Hanna will be back for that show. And just want to thank all my guests again from this week. Stefanie Kammerman of thestockwhisperer.com, Glenn Thompson of PacificTradingAcademy.com, Jim Kenney of OptionProfessor.com, and Matt Buckley of TopGunOptions.com. Thanks, everyone.
Thanks, folks.
Thanks, David.
Thanks, David.
Thank you.